All right. Good morning, Free State of Hex. This is the chart set for the 31st of March, 2021, and we're going to get right into it. Disclaimer: the information displayed in this broadcast is known to cause increased amounts of FOMO. Wells only is by himself this morning, and he is not responsible for any losses you may accrue for having weak hands. Please watch all of my streams. The information displayed herein is very valuable and very mathematically sound. Get right to it. So, as of this morning, we are on the 472nd day minus the days missing, plus the days missing from the exchange from when it first went live, excuse me. Because as we all know, the adoption amplifier, I think, is on day 484 as of the end of today's count. So as of this morning, we are currently at 364% post big payday. Last night we were at 328%, if I remember correctly, or 329, or 330 actually, 330. And this morning we are at 8,713% rounding up in terms of hex returns since inception with respect to the days that I'm tracking here. The T-shirt rate is almost at 15,000%, 14,941 rounding up. The Ethereum index is at 795%, rounding up. And again, what I'm comparing here are the ages, right, of Ethereum, Bitcoin, which is at zero return still because it is still not live with respect to when it initiated its existence. We still have approximately 90 days before we hit that mark because Bitcoin didn't go live until day 562 in its cycle. And this is just apples to apples comparison of return streams with respect to age. And again, I just want to highlight these trend lines that I'm showing here, just to impress upon you guys what I've been talking about really since day one, and how the return streams for Hex are log based too, and how the return streams for Ethereum are, I think, are log based 1 over X. I can't remember exactly which one this is, but this is one of the weaker ones. Um, so we don't really care about that one. And Bitcoin clearly has no trend. So the whole point of my spiel is that given that Hex is a log base 2 function, uh, its demeanor, its characteristic, right, its nature, the way that the system will always move will be around this curve, this trend line. And that's always going to be true. So if you think about it, right, like this, what you're actually doing over time when you're buying Hex is that you're buying the shape of this curve, especially if you stake it 4 by 5, right? If you stake a 4-5 the max, you're gonna benefit from just holding this line in your back pocket from the beginning of that point in time until the end of that time. And the reality is that no matter when you start, you're always gonna end up on this side of the line, right? And that side of the line is really personal to you because you make the decision when you start a stake and you make the decision on when you end the stake. But the thing you have to understand is that this trend line is a guarantee. And the reason it's a guarantee is because that's the nature of this system. It's a log based 2 system, and I show it every time that I'm creating a chart, right? And I go over what happens every time price pauses at a certain price level, because those certain price levels are power 2. I mean, they're base 2 levels, right? So if you don't know, just Google what the values are of X squared, and that's what you're getting, right? That's one way of viewing it. You can also do well, that's the best way of viewing it, X squared. You get 2 squared, 4 squared, 8 squared, and you're gonna get those values, right? You're just gonna get those values along the way. And the thing about it is that when this function is inverted, you get more of a step up function. So what does that mean? When you get 2 squared is 4, 3 squared is 8, um, 4 squared is 16, 5 squared is 25, 6 squared is 36, right? You're pausing all around these levels, right? What did I just say? 6 squares or 7 squared is 49, right? When you're flipping this on its side, some values are skipped because what happens is that the equation is being flipped on its head, right? So it's becoming inverted. So instead of traversing vertical values, right? Like if you think about this chart and you flip it sideways, right? Like if you rotate this chart because it's currently horizontal and you flip it to the vertical way, right? Vertical direction. This parabola, this logarithmic function that you're looking at is actually then a parabola, right? And if you don't know what a parabola is, look, Google it, search it, and you'll see that it's just this line sideways. So what does that mean? That means that instead of traversing values vertically, we're traversing them horizontally through time in conjunction with the fact that this line has to go this way, right? So this trend is always going to be true because of the nature of this function. And every crypto has a function embedded in it, whether it knows it or not the point, because this is all code. And code is ultimately math at the end of the day. So just think about that. If you guys have any questions, definitely reach out because I know this is new. And just to finalize this concept, the way I like to describe it is think of it like this. Consider this chart an actual carpet. And when you're walking up to this carpet is when you're actually coming to buy and you're going to actually stake hex. Because what you're actually doing is you're picking up this line when you're staking it at the max and you're putting it in your back pocket and you're forgetting about it. Because we know that T-shares are going to take care of us over time and they're going to carry us higher, right? Because this trend line is actually based on the T-share index, not on the hex index. So let me make that clear. So this line is telling you where price is going to go, not only with respect to the value of the system, but with respect to the price that people will have to pay to participate in the system in order to get a share, right? In order to get a piece of the pie. So that's just what I want to highlight. Think about this as you standing over a rug. You're literally picking up this line, putting it in your back pocket, forgetting that you have it, and when you come back to it, you come back to this rug, and you place this line on here 15 years later, this line is going to be exactly the same. The only difference is going to be the size of the values of these numbers because over time, these numbers have to traverse these values. It has to scale them. It has to scale them. It's not an option. Very important thing to understand. And we'll move on to the next chart. All right, so we're on the 133rd day of post-big payday, and as of now, we are currently at 364% rounding down from when I recorded this price. Sorry about that, guys. And again, this chart is tracking the first halving, second halving, and third halvings of Bitcoin versus the hex price post-big payday, which I think is what matters the most. And it seems to be the case because now is when we're seeing the real nature of hex, how the dips are hard to buy. All these things we've been seeing during the pumps pre-big payday are now second nature, or even better yet, first nature for the system because you guys see what happens when people sell. It's almost irrelevant nowadays. It's kind of crazy because, as you guys know, I'm tracking some big wallets out there that are actively selling, and it's interesting, right? Because we went from one seller or a few sellers causing all this to now, no matter what, those cells just get eaten up alive for breakfast, lunch, and dinner. It's kind of astonishing to see. So really start understanding what I've been talking about in all of my streams because it's becoming true. Very important to understand. And the thing about it is that it's important for you to understand because it's going to help you interact with the system in accordance with its nature, right? Because if you can't spot a dip, or you're realizing that it's hard to spot a dip, well, and then leaves you one solution and one solution only, right? And again, it's on you to determine what that solution is. But I'm just going to give you the facts, and I'm going to show you, right, the reality through these charts because that's what it's about. It's about understanding where we are in time and exactly what's happening, and that we're here to take advantage of it. And as you guys can see, we have definitely surpassed the previous high point, not only once but twice, right? This is the New Year's high. This is the pre-big payday high, November 1st, December 31st. And now it looks like we're going to go on ahead and close this gap. We seem to stay within 80% behind the first Bitcoin halving. Last night we were at 78%. This morning we're at 81%. So that seems to be the range. It will be interesting to see what happens once this starts compressing, because it's ultimately a spread. We already see that this just keeps expanding, and so does the second big payday and the third big payday respectively. They just keep expanding. Um, Hex just keeps getting away, separating itself from them, which is interesting. I'm still trying to grasp the meaning of all of that, but what I do understand is that Hex, like I always like to explain, got all of its inflation out of the way, right, in one foul swoop. Just boom, get out of here. And now we're starting to see the effects of that, because supply is what supply is, right? And this is why understanding automated market makers is very important. There's no order book just sitting out there, with bid and asks going up 10 prices and down 10 prices, right? It's literally just what's at the market for now in most cases. Given the new update from Uni, we'll see how things change, if at all. But as of now, things are status quo, and price is just, gonna keep going where it has to go, because it's a vacuum. Yeah, and we'll keep going from here. All right, so T shares versus Ethereum is the pink line, and T shares up there as a value of Bitcoin is the orange line. Now, as a value of Bitcoin, we're up 6 basis points overnight. And again, this is a ratio, T shares versus Bitcoin. And the T share value is at 0.56% of a Bitcoin, right? And we all know a Bitcoin is $60,000, almost $59,000. So that's kind of crazy, right? Because that's like $300 plus, 325 if I remember correctly when I put this in the system. And the T-shares versus Ethereum are 18%, and it looks like we're taking on a new high there. Oh no, actually I think the last one was 18.06%. So we're getting there. We're getting there. We'll see how the day ends. We keep making new highs, and with that, T-shares is actually dragging up, right, the value of Hex. So we keep making new Hex highs. So by default, we're making new T-share highs. Important to understand. As you guys know, this data didn't really change much. Clock hasn't turned, so I'm not going to harp on this too much. But payout per T-share, some index is letting you know how many Hex you've received over time, but with respect to a return. So how much did your Hex payout increase over time versus day one for one T-share, right? Because this is the payout per T-share summation index. So how crazy is that compounding? That's basically what this is telling you. And 157,644% return just on the payout per T-share is ridiculous, right? Because the summation is what you're accumulating over time. So you're starting from zero, and now you're at 157. I mean, this is just crazy. 1,644%. This is insane. Payout per T-share index has increased 517% over time. The daily payout index has increased 11,400% over time. Now, I don't know about you guys, but I haven't seen any pool that can claim that they've increased this much over time. I mean, if I'm wrong, definitely let me know. If not, well, there you go. We'll move on to the next chart. Hex payout metrics. This is the total T-shares, daily payout in yellow, and payout per T-share in magenta. And as of last night, the payout per T-share was 5.7 payout Hex per T-share. Daily payout from the system was 63.078 million. And if you ever want to know what that is in dollar terms, just multiply it by the price of Hex for that day at that time, and that'll let you know exactly what the system paid out in dollars. Because this is the total amount of Hex paid out by the system. Total shares keeps creeping up, again letting us know people are adopting the system, and we haven't been really past 11 million T-shares in a long time. I looked at the highs as far as T-shares go last night, and the only days that were higher than yesterday's total T-share count were literally the only ones surrounding Big Payday. So that lets you know that people are adopting the system, full stop. There's no more questioning that fact. This is your certifiable proof. Because as you guys see, this was the '08 taking care of the Staker class, right? the other side of this line is gonna look just like it. It's gonna be a mirror image, if not further down, because of the supply constraints at the time with respect to the adoption phase, right? So all of these things are important to understand, and that's why I talk about them. T-share rate, I didn't really update this chart, but as you guys can see, well, the APY is actually 37.05. I thought I updated this, but I guess not. But either way, price is higher, right? And that's the whole point. It's about that balancing act. While the APY goes down, that can only happen because people are staking more, thereby causing the price to go up. And they are staking more, and you guys will see why and how I know in a little bit. I mean, we see the whale bot, right? But it's not just about the whale bot on Twitter. It's about the actual whole movement of the system. It's very important. Um, so yeah, so when price goes up, yield goes down, and that's how bond math works. It's that scaling mechanism, right? It's keeping things in balance because this is a fixed income product that's meant to pay a yield, and it has to act in accordance with that, such that things don't go out of whack and just don't make sense. Because then, if you're paying too much for yield when it's not worth it, right? It's not worth it at all because you're just giving your money away. And if the yield is too great for the value, right? Like we're currently living right now, that's a reality of Hex, and it's time for you to take advantage because it's not going to last forever. Very important to understand. This is a payout per T-share sum line, right? No percentage. This is just the total amount of Hex you've received since day one per T-share. I mean, this is crazy. 1,739 rounding up. I mean, we're 0.18 hex away from being 1,739 if you were staked with one T-share from day one. I mean, this is crazy. You're just getting this for participating in the system, choosing to earn your trust, and to earn your interest trustlessly. That's it's confusing to most people. They don't get it because they're used to having a middleman in the way. But once they find this and they see that this is what they can do for themselves, things change, right? And that's why I like to talk about this stuff and help people understand this stuff because it's very important information. The Hex index, as we already went over, is at 8,713%. Just phenomenal. And as we've seen prior to, price just hugs this line. And I know this return line is not in logarithmic form, and it's for a reason. I want to show how price really reacts to the payout per T-share sum line because we have to understand that the T-share is the value proposition. So no matter how we look at price, it has to be related to the T-share, right? Because that's the value mechanism in the system. Very important to understand. All right, this is quasi hex stock to flow tracker, and as we know, we can't really track stock to flow in real time because this is ever changing, right? The T-share rate is ever changing because people are going to enter and people are going to exit over time, and that's going to change the T-share rate in real time. Very important to understand that. That's why when you take this number and divide it by this number, you get a T-share rate of some sort, right? Because this is the actual math that gives us this. So right now, T-shares are significantly outpacing Hex in terms of cost. What does that mean? We're not quite sure yet. Maybe we got to pull back because maybe T-shares are a little overvalued. Maybe they've stepped out of bounds a little bit. Maybe the system has to get back in line. I mean, that makes sense because nothing moves up in a straight line, right? It takes us years to grow to our full height. It takes us, months to learn how to walk, if not a year or more. For some of us, right? Like there's all these things that you have to understand that are just real life, and they're real life for a reason. And price is not going to be any different. And I know people come in crypto to get rich in 5 seconds, but it's just not, it's not reality, unfortunately. If you get lucky, great, you hit the jackpot, but that's just not, par for the course. All right, expiring shares. So this time we're going to cover 3 points in time: the 23rd of March, the 29th of March, and as of this morning, the 31st of March. Now, the biggest changes from the 23rd to the 29th to the 31st are happening on the short end of the curve. Why is that important? We talked about this last night on the Quant Gang stream, myself, Matty Allen, and Kareem. And, it's like we always say, uh, the more stakes at the beginning of the system, the more higher this projectile is going to lift off sooner, right? Because that T-share price and the ROI generated from that are the two things, right, that determine how many hex you need to stake. Very important. So the more hex that's staked up front, right, while it's not taking into account a significant portion of time, the T-share rate does take into account the size of the stake. So while you're not hitting the T-share rate reprice on both factors, you're still hitting it on one. So there still will be a change, right, in the T-share rate. And I think as of last night, we were at 17,187 T-share hex per T-share. So again, this is the system saying, hey, I'm gonna get more expensive every day. If you want to get into the game and earn this interest, you know, at a beneficial rate, the sooner you start, the better off you'll be, because I'm only going to be more expensive tomorrow or the day after. Because the T-shirt rate, if it's not going up daily, it's definitely going up every 48 hours. No doubt about it. And this is only going to add more, as I like to say, fodder to the cannon, right? Making it a bigger boom. And that's what I mean with that. So if we look at the front here, we'll just look at where my cursor, the yellow part, ends. Okay, traversing the yellow part and traversing it even further, letting you know how many more stakes we're seeing entering on the short end of the curve. And I'm gonna call this the curve because in a bond market, when you're looking at things across time, it's actually a curve, um, a time curve, right? And the reason it's a time curve is because the further out in time you go, the more valuable things are, meaning the more interest you're going to earn. And that's just the way the system works. While it's not visible here, when you look at HEX.VISION, it is visible when you're looking at the ending stakes because you're looking at the cumulative shares. And that's, again, also looks like a logarithmic function. And I've gone over this in previous videos. So if you've missed them, also in Quant Gang streams, I've gone over this. So if you missed them, definitely go back and look for them, find them because they're there. You will enjoy the relation because it's very true. And this is really a bond curve. This is a yield curve, right? Because the shorter you are on the curve, the less yield you'll make. The further out on the curve you are, the more yield you make. So this is in reality a yield curve. You're just not looking at it in that way because there is no yield to look at here, right? The yield is personal to you, and that's the thing that makes the system unique. However, what's important to understand is that these expiring shares are what determine the rate change of that yield, or the rate of change of that yield mechanism, right? So that's why I harp on this chart so often, right? It's very, very important, right? And if we look here in the 2-year range from this point in time, 2 to 3 year, it doesn't really change significantly, except from the 23rd, right? But after that, it kind of stays the same, right? So that's important to see. Now we're gonna go down here to this 4-year range, 3-year range because it's 2021, and this is covering 2024, 2025. So 3 years or so, 4 years, and we'll see what the change has been here, if any. A little bit more stakes, but since then, no. And we'll go out to the 5 to 6 year area. Let's go back to the 23rd, and again, it's been minimal change. There has been more stakes, of course, because the volume has gotten, as you guys can see, the color change lets you know there's been a positive rate of change because it's gotten darker, relatively speaking, and it went darker again on the 31st, right? Because I'm looking at 3 points in time. And as we go down to the 7 to 8 year duration length area, we see things are pretty stagnant, but the rate of change is there, right? Like this continues to stay dark, meaning that there is a positive change, relatively speaking. And with the long-term stakes, as you guys see, these are still there. There's always going to be a big wall right there. Now let's take a look at this. Yeah, this increased a little bit from the 23rd to the 29th, as you guys can see, but it's pretty much been just there since then. Let's see if we got any action down here. Yeah, we got an increase in the staking going on the longer end of the curve, 14, 15 years, which is great to see. And as you guys can see, the color here stays bold, letting you know that the rate of change is positive, and that's what we want to see. And we'll keep moving from here. Now, this is the Hex to Ethereum correlation chart and the Hex to Bitcoin correlation chart. And as always, the Hex is on the x-axis of both, while Ethereum and Bitcoin on the y-axis of both. So please note that the grouping for the Hex returns are positively skewed to the right side of the x-axis, meaning greater than 0, while minimal amounts of Hex returns are on the left side, letting you know that the return streams for Hex are positively skewed. And as I always like to talk about this, when a professional looks at this and they see this, right, versus the two big dogs, Ethereum and Bitcoin as of now, it's a no-brainer what they're gonna pick. Just giving you the facts, because the nature of the system is what this is detailing you the nature of the system, right? It's positively skewed. It's always going to be positively skewed no matter what. And this is what this is saying. You will have down days, of course, because that's the nature of the beast, but you're majoritarily speaking going to be up. And that's the whole point, right? You want to look at what the big picture is going to be, because every day can't be a win, but you want to be able to win over time, and that's the goal. And now, the real Hex price chart, right? This is the price of Hex as I recorded it. It was 1.894 cents. Right now, it's currently at 1.873 cents. So we're down a little bit. Not much to really brag about. I mean, who cares? It's still zero, right? Payout per T-share is at almost 11 cents with respect to this price and what was paid out, giving us an adjusted Hex price of 1.27 cents rounding up. So, or I'm sorry, 12, almost 13 Hex, or 13 cents rounding up, which is crazy. So crazy that I couldn't even pronounce it right, because I'm so used to saying 1 point whatever, right? But in reality, this is the real price of Hex, and this is the thing. As you look at this chart over time, you'll notice that the orange line and the pink line, in conjunction with the yellow line, right? Like the yellow line and the pink line are kind of together. They're kind of going to coalesce over time, but the orange line is just gonna, over time, stay away, and it's gonna, depending on what happens with the staking and the pricing, it'll be interesting to see what happens with this gap, because it's currently getting wider over time. So maybe when the return stream for Hex gets, surpasses or crosses the T-share rate, or the rate of change for that, maybe this will then outpace that. I'm not so sure, but it'll be interesting to see what happens over time, because as of now, this spread just keeps getting wider, and this is what the pink line is really telling us, because the pink line is ultimately the spread between the yellow and the orange, because again, the yellow line is the adjusted Hex price, and the adjusted Hex price is merely the sum of the Hex price, which is the orange line, and the payout per T-share, which is a pink line. So if you look at this as a spread, what you're really doing is you're subtracting the adjusted Hex price from the Hex price, and you're getting this actual payout per T-share. You see, so everything is kind of interrelated, one degree or another. And of course, the Hex PE. And as I was talking about last night on the Quan Gang stream, you'll note that this slope is, while really not much of one, right, is positive nonetheless. And this is a new characteristic that we haven't seen before. If you look at the Hex PE ratio going back, like, it kind of looks like it, but no, this is really the first time we have successive moves up in the Hex price to earning ratio, and that's very important. And as we were talking about last night on the stream, I know this is not intuitive to most people, because most people are going to think of this as the dollar value of a T-share divided by the payout per T-share, or the T-share rate, or the Hex T-share rate, meaning how many Hex you need for a T-share, divided by the payout. But the thing about it is that you have to understand is this: it's really, even if you're taking that dollar value, those dollar values cancel each other out, because this is a ratio, right? Hex price to earnings. So what I'm really doing is I'm taking one Hex, dividing it by the number of Hex you're getting, because you have to remember, the payout per T-share is already canceling itself out, because that T-share is a non-factor. Like it's there. You're already. It's one really, right? Because the system is giving you one hex, one T-share, or is giving you one T-share per that payout. So it's really one already. So what you really want to do is you want to look at one over that T-share payout rate, because then you're just dividing it by one anyway. And when you're dividing something that's being divided, you're just multiplying by that second numerator, right? And anything divided by one is one. So ultimately, we're just dividing one over the hex payout per T-share, which gives us this yield, this valuation, this number, right, of 0.175. Now, the more people that end up staking, the lower the payout is going to be with respect to the current price, right? But what you have to remember is that with respect to dollars, that's not going to matter to us because we get paid in hex. Unless you're cashing out and getting fiat, right? Like it's not really relevant. What's relevant is that this is becoming more valuable over time. And the longer you hold those T shares, right, the more the system will be benefiting you. Because that's what this actually is saying, that it's going to go and start reaching parity. And hex price is going to react to that, right? And that payout per T-share going down is a function of that, believe it or not. Because you have to remember, the system is there to check itself. And it has to. That's the way it keeps the game theory in check. That's the way it keeps the users in check. That's the way it keeps a lot of things in check. And as always, let's not forget that the all-time low happened during World War One at a 5.51 S&P 500 PE ratio. Now that's 551%, which is not the same thing as 17%, right? 17% is significantly smaller than 551%, guys. So this is what you own. This is the value you found. This is the jackpot that you have. Have a great day, and always make it a good one, guys.